Good afternoon, everybody. Live from Cornelius, North Carolina. Get ready for afternoon market action, everybody. Yeah. What a way to start that off. Hello, my name is Glenn Tompkins.
My name is Patrick France.
And we are your hosts for the next 45 minutes or so for afternoon market action, where we talk about what's going on in the news. We give our insight. We use a powerful program called the VectorVest system. We analyze stocks. It's all live. We get to interact with you live. And as a matter of fact, if you can hear us on our YouTube channel right now, let me know in the chat. Let me know in the chat that we are coming across loud and clear. Let me see some VV Nations come across to make sure that we are coming across loud and clear. I got nobody chatting in the chat. Hey, where y'all guys at? Are y'all guys chatting?
There we go. Now everybody's starting to wake up.
Okay, there we go. Man, you guys need to wake up today. You need some coffee? I can get you some virtual coffee so you guys can wake up this morning. Holy smokes. There we go. Seeing more red in the boxes. Yeah, Fernando, that's what's going on right now in the market. Hopefully, as we get ramped up here, hopefully you guys have been paying attention to the content on our YouTube channel. Patrick, I think, just finished up a series on Technical Analysis 101, which I think was excellent for you guys to be able to know how to use a lot of different technical indicators to get in and out of stocks. I just completed a video last night called Do This Now, and Fernando, it goes right along with what you just said, seeing more red boxes, more red in the boxes. When Patrick and I start to get into analyzing the market live today, everything is just pointing to more downside. All right, it's just pointing to more downside, and it is what it is. We're not trying to be the bringers of doom and gloom. We're just telling you like it is, and we'll cover a lot of the different reasons behind why the market is the way that it is. YouTube sends subscribers a VV notification about 4 minutes after you go live. I send it out to go at exactly 2 o'clock. Oh, the YouTube one? All right, so that's not my deal on that one. But on the YouTube, I set it up to go up at exactly 2 p.m. And look at that. Andrea says, thank you to Pat for the Tech Analysis 101. I think it was a great series. And you are finished up with it. Is that not correct, Patrick?
Yep, we had our last one this week.
There you go. I think that if you haven't watched it, you guys need to go really check out the content on our YouTube channel beyond just what we do on a live stream. So I'm just putting that out there real quick. If you're brand new to the channel, don't forget to hit the subscribe button, hit the bell icon so that you can get the alerts before we go live or before a video goes out on the channel. If you like the content, I just ask for you to hit we ask for you to hit the like button if you feel that it was worth it for you to be here. And one last thing, I always try to have as many people as we have with the content that we give. Take a second right now to share the live link on your social circles to get more people in here to see what we're doing here, right here on VV Nation. All right, so share that. You could make a difference in someone else's trading once they get to at least hear what we have to say. Let them make their own decision whether they like us or not. That's up to them. But we need to get them here. So if you guys can take an opportunity to just do that for us, it would be greatly appreciated. Now, I got a big something coming from Patrick in a second. Fernando says the Federal Reserve officials have been surprised at the pace of inflation and indicated at their last meeting that they expect higher interest rates to remain in place until prices come down according. And that is exactly right.
I see a quick summary. Many participants emphasized that the cost of doing too little to reduce inflation outweighed the cost of doing too much.
And Lee brings up a point. He says the Fed is notorious for overshooting. Lee, the Fed would not have had to overshoot if they didn't continue to look at inflation as transitory. They were way off course, and they wanted the market to run hot. They didn't want to slow it down at the time. And, the other side of quantitative easing or printing more money and putting more money into the economy is going to be rising inflation in it. And it's a cycle. It definitely is a cycle. Turn up the volume, especially on Glenn. Hold on. Hopefully this works better, Damon. I'm talking a little bit more into my mic. Hopefully that works out better. If not, Joey will work in the background to get us going. Frank says higher highs. Higher highs on what, my friend?
Glenn, let's also not forget though, QE was started to try to get us out of the 07-08 crash.
And then it continued.
It did not need to go on since 2009 and onward. It was not designed to go on for over a decade.
That's true. And
so
a lot of that, after all that time, we had more going on because we called it the Trump rally. And then after that came COVID. All right. So there was a lot of things going on. You're right. You're absolutely right. We didn't need to do it for 10 years. We didn't need to do it for 10 years. And
now we're going to be paying for it.
Now we're going to be paying for it. And that's absolutely right. So now that we got the majority of the people that we got here for the time being, Patrick's got something to bring to the table. So Patrick, let me see if I can, what do I have for you? I got nothing. Dang.
Hey, that's fine. We can do it right here.
All right.
All right. So first and foremost, welcome everybody. So for anybody who's been following us for the last year or so, you may be familiar with an event that we did last year. It was our very first one. It was a trading for charity event where we did some live trading a few times a week. You guys helped out a lot and donated so that way we could raise money for Levine Children's Hospital, also Toys for Tots as well. This year, I'm excited to announce that we are going to be doing Trading for Charity again, starting the 25th of October. So 2 weeks from now, roughly, we'll be going until the 9th of December, if I recall correctly. We're going to be streaming on Tuesdays and Fridays. So starting at around noon Eastern on Tuesdays and Fridays, come hang out with us. Help us raise money for a good cause. We're going to be, it's official now that we have an official partnership with Levine Children's Hospital this year. I've been working on that over the last few weeks. Got that finalized, so we will definitely be a little bit different than last year, but we're going to be donating and focusing specifically on Levine Children's Hospital this year. So I want you guys to tell everybody about it. The more people that know, the bigger the event, the more money we can raise to help kids that are going through some hard times, especially during the holiday season, and we want to make that better for them. So I urge you guys to come hang out on Tuesdays and Fridays starting the 25th of October for our second annual Trading for Charity event. Got a lot of new things planned for this year to make it a little bit different than last year, so you're not going to want to miss out. There's going to be some great giveaways, some great prizes you guys can win, all while trying to help better the holiday season for kids that really need it. So make sure, as always, subscribe to the channel and turn on notifications. That way you get notified every time we go live, because I'll be doing some shorts as more information comes out. I'll be doing some shorts, maybe some extra videos, so you won't want to miss out on all those details. But make sure to come hang out on the 25th of October as we kick off our first stream for Trading for Charity part 2 or round 2. So I'm excited to bring this here for you guys. I know last year was a lot of fun, and I'm looking forward to this year and some of the new changes that we'll be announcing as we get closer to the event. So yep, that's gonna really be it. Make sure to tell all your friends, tell all your family, come hang out, learn how to trade, learn how to make money in the markets consistently. So that's really about it. That's as much as I can give out right now.
Awesome.
We will have more information as we get closer, though.
And it's going to be an awesome cause. This was Patrick's brainchild, and it was great last year. I'm looking forward to it being even bigger and better this year. All right. So that was a big announcement while we had the majority of you here right now. Now let's get what you guys came here for. Let's go see what's going on in the market. All right. First thing we're going to do is I'm going to bring up the web stories. Well, listen, I'm just trying. All right. Don't give me that shake. By the way, Joey's here. Hi, Joey. All right. So, Joey, right now I'm mad at him, so I don't want to talk about it. All right. So, investing.com, this is the stuff that came out today in regards to why the market is moving the way that it is. Patrick, you have control, so we can both look at this. But this was the big thing, and there's going to even be more coming out tomorrow. The CPI comes out, the Consumer Price Index. This was the Producer Price Index, the amount of money that people are spending to produce goods. Year over year, from an inflationary standpoint, it was dead even. We thought that it was going to be a little better, but it didn't get a little better. It's, year over year, it is the same, but this is the big number. The month over month rose. So it's still costing people more money, producers more money to produce the goods. It was negative 0.02. Last one, it went up to 0.4, or went up 0.4%, which is, not a good thing, all right, overall, and that isn't, it's just not. Now, Ben asked, any idea what's going on with SQM? Normally on a week-over-week basis, I put out a post so that we can get stocks from you guys. I don't think I did so this week, so I don't know if we're going to have the time to look at any individual stocks. I think SQM is a lithium stock. I think that's what it is.
I think you're right.
I think that it is. I'm still big on 3 out of the 4 commodities that I've been talking about. I'm still big on oil, on lithium, on uranium, but not nearly as much on gold as I was. So I'm going to talk a little bit about that. I'm still big on lithium, especially because of the whole EV space. All right, even though Rivian had some bad news come out about recalling just about all their cars, so that's enough. Now, Francisco, you're asking about individual stock. No, stop. No more individual stocks unless we have an opportunity. Let me say it again. Unless we have an opportunity to look at your individual stocks, don't type them in today. Let's concentrate on what's going on in the market, all right? So that was big news. The PPI year over year, September, that was the core PPI unchanged, but the PPI year over year for September actually dropped a little bit. But even with that little bit of a drop, I still don't think the Fed is seeing enough being done going after inflation. Inflation is not really being affected nearly as much as maybe they anticipated with the rising interest rates. All right, so that's just where we stand right now, and I think it's playing a huge role on the market swings, up and down, but a lot more down than up. Even on these rallies throughout the day, they still succumb to the market moving lower by the end of the day. Because the news overall, folks, is still high inflation, and we're still going to keep raising interest rates at the higher accelerated rate that we're doing it now to go after inflation. And I hear you, Lee, in regards to we're overshooting. We didn't have to overshoot if we would have came to the party a little earlier, but inflation is rampant, Lee. So I get you with the overshooting, but what else are they going to do? If they do less, inflation is going to continue to rise. Tomorrow will be the big day because it's going to be CPI. The Consumer Price Index comes out tomorrow. Today, it was the Producer Price Index, and they're not making a dent nearly as much as they should think that they should be by way of the rising interest rates. Patrick, what's your take on it before we go to the next story?
I mean, yeah, watching the PPI data come out this morning, I think we could see CPI come at around 8%, maybe 8.1. But regardless, no matter what the numbers show, I don't think it's going to be low enough to give any hope to what's going on and see a potential rebound in the markets. I think it will just see more confirmation that the Fed is going to continue to raise interest rates regardless of who begs them to stop, basically.
All right. And Ben, some news on a stock, and lithium is sinking. I get you on lithium is sinking. I'm looking at it long term because of the demand on the EVs. That's where I stand in regards to lithium. Short term, if it's sinking, maybe you don't take it unless you've got money that you can put to the side that you're not worried about losing to put into lithium. I've done the same thing with uranium. I've got money that I could afford to lose if I had to, baked into uranium. All right. What is the CPI projected to be? Well, it was projected year over year to be at 7.3. It was projected to be even higher, but it was unchanged from the previous of 7.2.
Well, no, CPI, not PPI.
Oh,
CPI. What comes out tomorrow?
I'm sorry, my fault. Let's go look at tomorrow. What is the CPI projected? That's today. Let's go to tomorrow. It's projected to be at 8.1, which is a little bit lower than the previous number. So it's projected to be at 8.1. All right, so we'll see. Remor says many of the commodities are heading down a little bit. It is what it is, but let the market come to you. Let those commodities come to you. All right, so that's to answer your question, Fernando. We'll see. We'll be paying attention to it tomorrow. I got the Jockey Club tomorrow, so it'll definitely play a role in what goes on in the market tomorrow. Next story. All right, this is a Patrick story. And guess what? Market Watch now comes up because you know what I did, Patrick?
What'd you do?
I paid for it, Market Watch. So now it'll come up. I'll talk to Clay about that, but I paid for it. Listen, there's too many stories that are out there on Market Watch that I want to look at that I can't, so I paid for it. I'll give you the sign-in if you need it.
All right.
All right.
So yeah, I saw this one come up this morning. I thought it was interesting, talking about the fear gauge or the volatility index, and talking about the relationship between the VIX and the S&P 500 breaking down, giving signs. Well, going off of the pattern. Oh, you guys didn't give me control yet.
Oh, that was me. I was typing. You should have control.
Giving a pattern that historically is shown when this happens, we still have more downside to go in the market.
You have control?
Nope. Still not.
Let me do it now. Anyway, all right, I'm gonna scroll down.
All right. So if you scroll down, there's a graph towards the about halfway down. There you go.
Okay.
So as you can see, at the very top, you have what's going on from October 2021 to October 2022. And at the bottom, you have 2007, 2008. As you can see, we've hit a pretty clear, stiff level of resistance here, pulling back from it right now. So this is saying right now may not be the best time to jump in if you're trying to nail the exact bottom, but VIX or any ETFs that are based off of the volatility index should definitely be on your radar, because if this thing can start really moving, we could see a huge explosive move coming into the VIX, in the near future, at least most likely by the end of the year. But to the downside of that, yes, you could make money off the VIX, but that's going to mean the rest of the markets are going to be blood red, and there's going to be a lot of pain for a lot of people if this comes true.
And the Fed already said the monetary policy that he's got in place is going to cause the economy some pain. And he said,
it's going to be more than some.
I hear you.
But yeah, I thought it was an interesting article, something to keep an eye on. VIX is a trade that I try to stay away from typically. But with everything going on, this may be a trade that I reconsider going back into or looking at, or at least, keeping it on my radar throughout the remainder of the year here.
There you go. And David says, I know you, David. CCJ, which is uranium stock, down big today. Glad I did not purchase. And for me, again, I'm holding uranium for a little bit longer term. Did somebody just call me Uncle Glenny? Elmer says, hi, Uncle Glenny. Wow. The market falling off a cliff. Don't worry. If things go nuclear, there will be nothing to worry about. Well, that's going a little bit higher than what I wanted to go. So let's talk about the market falling off a cliff. IMC chief economist, worst is yet to come for a global economy. This story was given out today. I think this sums it up where we are right now, that we still have a lot more downside left in the market. Again, this is an opinion piece. from a chief economist. So this is just their um, take on it. I think beyond just looking at someone's individual take on it, folks, you can just look at what's going on in the market. Um, it looks like for the time being, we're pulling back a little bit on showing market timing, our market timing stuff, because it is so well worth it to have a subscription just for our market timing. So we're going to base a lot of what we're looking at off of the S&P, since that is the main point that people look at when they're investing in the market, the benchmark. Um, just to let you know that. But our market timing, if you're a subscriber, has been spot on. Our guidance on a nightly basis has been spot on. For those of you who are subscribers to the VectorVest software, has our market timing information helped you? Type a 1 in the room if it has. Type a 2 in the room if it hasn't. And I'm doing this for the benefit of the people who are not subscribers to the VectorVest software. Listen to what the people in the room are saying. All right. From a market timing perspective, how's our information helped you? Type a 1. If it has not helped you, Fireblazer, are you really typing a 2? And you know something? There's no right or wrong answer. Well, there is a wrong answer. If you type
I mean,
a 2,
you got to
I think
have
that's
one,
the wrong
man.
answer.
Come on.
I think that if you type a 2, I think that it is a wrong answer. And you know, there's going to be, and for anybody, and I'm going to step out on a limb right now, for anybody who tells me 2, you need to call into our product support and get a better explanation. Not only that, no, let me back that up. For anybody who's typing 2, you need to watch the daily color guard report that we do every single night. There's not any reason in the world that anybody could really type a 2. It was sort of kind of a rhetorical question. But if anybody is typing 2 and you saying that our market timing has not helped you, you ain't watching the daily color guard report. I'm going to step up and I'm going to say that right now. And if you're telling me you're watching the daily color guard report and you're still typing a 2, something's wrong. Straight up, something's wrong. Because we go through detailed what happened today and what to be prepared for tomorrow. Plain and simple. All right, plain and simple. And for those people who are brand new, when from a market timing perspective, we don't predict where the market is going. We follow the trend of the market and we keep you on the right side of the trend. So I'm just going out after the people who typed in a 2. You're not watching the color guard, or if you are watching the color guard report and you're still having problems, I'm not sure what else we can do. That's all I got to say. We've saved a lot of people a lot of headaches. A lot of people a lot of headaches from a market timing perspective. Ben says, 2, those that don't know how to use VectorVest. And amen to that, Ben. Amen to that. For anybody who's typing 2, we go above and beyond from a market timing perspective to help you. All right, Mark says, oh, no, you didn't. Yes, I did. Oh, yes, I did. Uh-huh. All right, the next story. The next story is Patrick's story, and this is a big story that he's been tracking, the whole Credit Suisse issue and the Bank of England. Talk about it, Patrick.
Yeah, so this is more to do with their competition rather than Credit Suisse specifically. But I thought it was interesting that we're seeing this sort of trend going on. Not surprised, but definitely thought it was interesting, kind of humorous in a way. With all the worries that have been going on about Credit Suisse, with their blast off they've had and their credit default swap numbers there. Other clients or other people who would use Credit Suisse that are leaving, other major investment firms are putting their name out there to try to pick them up to try to build new business.
That's called doing good business, Patrick.
Yeah. So it's going to be interesting to see. Obviously, we don't have any sort of numbers to really go off of. Everything is just pure speculation at this point. But it's definitely going to be interesting to see in their quarterly reports how things change, and see if we're noticing or if we can try to get a better gauge of how many people are actually exiting right now. Because as we've seen with like the crypto markets, for example, the first people to get out the door are the ones that are least affected. And as things continue to develop and get uglier, this could be real interesting as, you know, people are starting to not be able to get their money out of the bank. And then that's when you start seeing the Swiss government have to back their bank up or bail their bank out. But it's going to be interesting. Obviously, this is all speculation at this point, but definitely going to be following along with this, seeing if we can tell, under assets under management, that sort of thing, if we're noticing a exodus or if it's just a few people potentially leaving right now. So just thought it'd be interesting to pull this up and show, what can be bad for some can also be good for others. So Credit Suisse having bad business right now is definitely going to be helping their competition. And once the numbers come out, we'll be able to figure out exactly how much they've actually helped out their competition. So
that would be interesting.
Stay tuned for more on this one.
That would be a very interesting follow-up. All right. How many of you are investing in gold? Type of 1 in the room. Because my next story is all about you. How many people are investing in gold right now? Type of 1 in the room. If you're not ready to touch gold yet, type of 2. I'm part of the number 2. How many of you are investing in gold right now? Type of 1. If you're not ready to touch gold yet, type of 2. All right, so I'm looking to see all the people who got the gold. Gold, I'm going to put gold and silver together. I'm going to put gold and silver together. All right, so now I see a lot of 2s coming in. All right, let me tell you why I'm with the 2s. Cash is king now. This came out yesterday. Not gold. Now, Alpha, I'm with you. A lot of people have had gold and been building up on their gold over the years. That's a little different story. I'm not going to tell any of you to get out of it. It's almost like a legacy thing, especially if you're up big on gold when it ran. All right, so I'm not going to, Alpha, I'm not going to tell you that you need to get out. But anybody trying to get into gold now as a gold play, cash is king. While gold has long been considered a safe haven in times of market volatility, where there was a direct correlation, investors are actually pulling out of the metal of Midas at this moment for a somewhat different choice. Cold, hard cash. All right. So I just did a story on gold. I did, right? Is it time to buy gold? Go check it out if you haven't on our YouTube channel. As I've mentioned on more than one occasion, Patrick and I try very hard to put out videos that are pertinent to the current market's conditions that you guys really need to go check out. Gold prices dropped 2% on Wednesday following reports that the Federal Reserve might once again raise interest rate. This time, ta-da! Hey, who's been giving you that number for the last couple of months? Type that name in the room. Who's been giving you that number that the Fed was going to do this by? What person do you know? What person do you know has been saying that for the longest time? All right, just type that name in the room. I don't know who it is. Patrick don't know who it is. Who's been telling you that for the longest time? But no, really, Mark? Really, Mark? Really, Mark? All right, so I still think that before this is all, and it wasn't Joey. Don't even put Joey. It wasn't you.
It was me.
It wasn't you. You ain't been saying that. But another reason why I think that gold is not a good play right now, and the biggest reason is because of the strong dollar. The strong dollar is, until the dollar starts to weaken, that will be the good time to get into gold. But cash is a position. And I think that, and Patrick, back me up on this or not. A lot of people feel that because they got money in their accounts, they got to put money in the account. Cash is a position. Yes?
Yeah.
And I think that a lot of us need to remember that cash is a position. If you're not comfortable with all the wackiosity that's going on in the market, David's not here, but I need to put that in the Glennism's book. Wackiosity. If you're not comfortable with all the wackiosity, cash is a good place, folks. Gold doesn't earn money. It sits there while you wait for the price to go up. In fact, you may have to pay to store it while you wait. Ooh, I didn't know that. Really? Someone knows that we don't believe in this, says dollar cost averaging. Really? That's like trying to catch a falling knife. Sigh. All right. So that's for all you guys that are out there on golds. Just be careful with it, folks. All right. Just be careful with it. Cash versus the money in the bank. You know something, with the rising interest rates, I'm wondering if are we getting closer to a point where people are thinking about putting money in the bank? Are they getting enough of a increase in interest to actually put their money in the bank just yet? I don't think so. Not yet. Not yet. All right. Next story. Patrick's story. Global margin calls hit European debt markets. Talk about it, Patrick.
Yeah, so we talked about it a few weeks ago. All the gilts in the UK, they were having margin calls, which could potentially put them into a downward spiral because basically the reason why the Fed or the Bank of England had to backstop them was these companies or these pension funds, hedge funds, all that were using basically government bonds from the Bank of England as their collateral. And as their collateral was losing value, aka the bonds, they had to close out some of those to try to make up the money for the collateral. But as they sell some of their bonds, that drives the price even lower. And so it was a vicious cycle of them having to sell out, then get margin called again because the price continues to go down because everybody else is selling out to cover their margin calls. But I warned everybody, we talked about it. This is a systemic risk for the global economy. It never starts off with the US markets. I know a lot of people here are in the US. Not never, but historically, whenever recession starts, it always starts somewhere in the globe and then it slowly spreads until it finally hits the US markets. Well, from the UK, we're now seeing all of Europe having, or all of Europe starting to see margin calls on bonds, on assets, on a lot of different things, on their derivatives positions, especially, which is where it really gets scary. But this is just, continuing on from what we saw with the UK. We're starting to see it hit not only the UK now, we're starting to see it spread slowly to its European neighbors. It's going to be interesting to see who's up next, but the US is definitely not
safe
not
from it.
What's that?
Not safe from this kind of situation.
Yeah, we're definitely not invincible. So pay close attention to all this because as this news starts to come out, and we're starting to see little bits of it, but a lot of it is being suppressed. A lot of people are talking, or a lot of people are trying to change the subject, not really talk about this or bring this up. But what does this mean for stocks? Look at 2007, 2008. These are the same eerie similarities that we talked about last week, where you start noticing one thing going up, especially in derivatives markets, mortgage-backed securities, derivatives, those sort of investments. One of them starts going belly up. They then start spreading to others. And then eventually they make their way across the pond into the US markets because globally systemic international banks are all interlinked. So as one starts to go belly up, we saw it first with Credit Suisse. Then we're noticing it with UK pension funds. Now we're noticing it with global markets. Even seen stories recently about US pension funds under the same kind of stress. So whether it's main news right now or not, it is still going on, and it is not a good sign for what's to come in the markets.
Two things. Gold Cross says you are your own contrarian indicator, Glenn. You go short, I'll go long. I'm not sure how I should take that. I thought we were friends, Gold Cross. Sigh. And one other thing. What are I bonds? I don't know what an I bond is. Do you?
German bonds.
Is that what it is?
Yep. I'm
someone
pretty
was
sure.
saying I bonds are a nice place to put money during a downturn. I agree. I don't know much about I bonds, so I wasn't going to try to answer that question or talk about that. All right. Next story. This is big. Wall Street Journal. U.S. suppliers halt operations at top Chinese memory chip maker. And you know something? Tool makers are pulling out staff and pausing work as they assess the impact of Commerce Department restrictions on semiconductor exports to China, which is because we don't want China to copy our stuff. U.S. chip equipment suppliers are pulling out staff based at China's leading memory chip maker and pausing business activities, according to the people familiar with the matter, as they rush to assess the impact of Commerce Department semiconductor export restrictions. And then I went and clicked on that. Export restrictions, semiconductor exports bid to slow China's military advance. New rule requires chip makers to obtain license from Commerce Department to export advanced chips and chip making equipment. I think people are afraid that China is going to try to take that stuff and better their stuff. So, and then we got the CHIPS Act, which I thought was going to be good for semiconductors, but the whole idea of restricting exports of this stuff is affecting the chip market. And I was looking at my most recent listing of semiconductors, and they're getting hit.
Well, we now know why Paul Pelosi sold back then.
Oh boy, I'm not trying to get Don't open up that can of worms. Not in here.
Right, fair enough.
Oh Lord, have mercy. I'm not going to do that. All right, but I agree. Believe me, I agree with you. I just don't want to go down that. I don't want to go down that rabbit hole. I totally agree with you though. Who's the one that said Gold Cross? Gold Cross didn't answer me about my deal about being my own counter, my own contra. That makes me feel some kind of way. All right, so let's go to the last story. I'm gonna get over it. And talking about jobs, U.S. economy to start losing 175,000 jobs a month next year. That's Bank of America talking about that. All right. Will that then really put us into a deep down recession? Yes. All right. That's the only thing that's keeping me from calling this a full-blown recession outside of the 2 quarters of GDP going down, is that the job market is still strong. But the U.S., this is, again, given by way of Bank of America, coming from the Epic Times. I just subscribe to that too. So I'm going to have to give you some of the passwords and stuff for this stuff, because I need this information. I know we've been talking about that, but I'm just paying for all of this stuff. Maybe I'll just get VectorVest to just reimburse me for it. But that's a big number, 175,000 jobs a month starting next year. We'll see. We'll see. How many of you think that this story has merit? Type a 1 in the room. How many of you think that this story has merit? Type a 1 in the room. How many of you think that this story is just bloviating? Type a 2 in the room.
Bank of America planning on laying off 175,000?
Not them by themselves. The economy, fool. The whole economy. Sigh. Which means if that was the case, how many people do they have? That would just be laying off everybody. A lot of people are feeling that this has got merit. A lot of people are feeling that this has got merit. I didn't see not 1, 2 up there yet. So, well, there we go. We got 1, and that's fine. I think that as we continue to raise interest rates, when people have to go borrow money, the interest rates are going to get to a point where it's going to be less cost effective to borrow money and better for you, for the bottom line, to just cut your staff. Just cut your staff. All right, those are all of the stories that we have.
I mean, remember at the beginning of the spring, we started talking about a few of those, and I said it's only a matter of time. We'll see more and more people starting to bring up, cutting jobs. And what have we seen since the spring?
We're starting to see that. I mean, and I know that I know you follow my Twitter every so often, Pat. I tweet out people who are laying off people, or thinking about laying off people.
Yeah.
More and more of that is coming to the forefront. Even if we lost 200,000 jobs, would say that we're creating. Oh Lord! Again, I'm not trying to go down that rabbit hole. Stop trying to make me go down that rabbit hole. All right, let's get into the software. This is where we look at today. Market looks like it's trying to run up again. Look at that. We got a little bit more advances than decliners. How many of you thought yesterday was a super freaking weird day? We were in the green. We went into the red. We went into the green. How many of you thought that yesterday was one of the most volatile days that we had in the market? Type a 1 in the room. In the most recent times, how many of you thought that yesterday was one of the most volatile days in the market? Type a 1. If you just think it was par for the course, type a 2 in the room. All right. Yesterday was a weird day, back and forth between being a bullish day, being a bearish day, and then finishing, for the most part, being down. Yesterday was just one of those days. It was a weird day. And right now, we're looking at all of the major indices. They are a mixture. JM said it was par for the course. And John, for JM and John that are both saying the twos, the VIX is high. So I can go right along with that. It is high, which will create those big swing days. But I still think that yesterday was a really weird day. And Michael is saying today, not much different. Back and forth. The market is up today, just a little bit, not by a ton. We do have more stocks advancing than declining. All right, let's go to our viewers tab and let's go start looking at the major indices. Everything is up now, not by a lot, but everything is up now. Let's do this. Let's graph all of these and let's go take a look at them. There's the intraday move on the Dow. Looks like a gap down. Gap down. Little bit of a channel. Spiders in a channel. Qs in a channel. Composite looks like it wants to start to run, but also in a channel. Nothing is moving up or down with much alacrity. Is that a good word? I want to use that word, alacrity. All right. But just back and forth. And we still got like an hour and 20 minutes left to the day. Let's see what happens. All right. I didn't want to do anything for the fastest moving industries. Patrick, let's go to your picks. You want to go to your picks? Let's go to your picks. Let's go look at Patrick's picks for last week, though. Let's go take a look at those. Patrick, you only had 2. Let's go back 1 week to the 5th. Were you bullish or bearish?
Buying those long, I believe.
All right, let's go see what
those
they
are
did.
contras.
Nice move. 13.2% on the week. Both of them up double digits. The market is down, or the S&P is down 4.87%. Good picks, Patrick. Good picks. Let's go look at your picks for this week. Talk about them.
Yeah. So, one of the articles that wasn't there was the letter of Kathy Woods that they posted on their blog. I think you tweeted out about it as well. But she basically was pleading to the Fed that they're looking at hindsight rather than looking at current indicators, such as commodities, that sort of thing, and basically pleading to the Fed to stop raising interest rates, going along with what we saw with the UN, that they keep on this path, it's going to cause a global recession, most likely in the likes that we've never seen. While I do agree that this is most likely what we're going to see, at the same time, it's almost what is needed to clear the junk out of the system, because it was never even cleared out back in the 07-08 issues. So I brought this one. This is a short ETF or contra ETF on the ARK fund. She's still going to be bullish. If she's going to still think that trying to plead to the Fed is going to end interest rate hikes, I'm going to be betting against that fund.
Good luck with that.
What's that?
Good luck with that.
I mean, everybody's been betting against her all year, and they've made killings so far. The other one, UVXY, coming from the volatility that we talked about. This is a leverage ETF on it. So if you want to gain some exposure to the volatility index, UVXY is a great way to do so. Innovative Industry, IIPR. This one has a really nice bullish divergence. It's in the healthcare, quote unquote healthcare, that political parties are trying to push this year. It's down a lot right now, but the chart looks good. And if you're going to be taking advantage of that play of the potential political moves that happen over the course of the remainder of the year, this is one of the highest relative safety stocks out of that industry. So this is one you definitely want to keep on your radar, especially if you're looking to take advantage of that move. Then we talked about Credit Suisse. So Credit Suisse, still bearish on it. We may see a little bit of a rise over, the next few weeks, maybe, depending on really what the Fed says tomorrow, or what the CPI data shows tomorrow. Banks have not been able to do as well as everybody expected them to do with the expectations of rising interest rates, because interest rates have been rising a lot faster than what everybody's expectations were, because everything was supposed to be transitory. So Credit Suisse already having a lot of issues. Obviously, trading or trying to short a $4 stock may be a little difficult, but look at options. Options could definitely be a viable or opportunity for people out there. And then this one is a little bit different than what most people were expecting to see probably today. DRN, real estate, bullish ETF on real estate. So it's just the inverse of the DRV that we've been talking about for the last few months here. The reason why is not because I'm bullish on the housing market or because I think the housing market is going to start taking off anytime soon. But if you look at DRV, it definitely looks overextended. So for short-term trade up until next week, I expect to see DRV start to pull back a little bit, and then look at DRN right now for that short-term trade just to capture a little bit of a pullback. The next one, GameStop. As always, it's one of my favorite stocks to talk about. I'm not going to talk about it a lot today since we have a lot of things to cover here. But GameStop, the chart looks good. We're noticing, a support floor continuing to hold above that $20 historical support floor that we've seen. Plus, we're also noticing some signs that a new uptrend may be starting to form, or a bullish divergence is also starting to show itself. So from a technical standpoint, I love seeing that there. So these are my picks for this week. Some of them a little bit more speculative, some of them more aggressive. We go take a look. Let's go 3-month. SARK have a nice steady uptrend. RT is still really strong. You do see a little bit of weakness over the last couple of days, so we may see a slight pullback. But then from that point forward, looking to see it take off from there. Glenn, when you send a message, I can't get to that.
Well, no, it's for you for later. It's about GME. Sorry about that.
Okay.
No, it's for you for later.
Okay. Yeah, but I can't get to the next button.
Oh.
It pops up the little flashy bar at the bottom.
Oh, okay. You got to
UVXY. Okay. Trading right at a support resistance zone, more actually a resistance zone at 1326. But as we were talking about down here, you had a nice steady uptrend, never broke down below the lows there, and now you're seeing an acceleration. On a short-term basis, we could see, based off of what we were looking at in that article, volatility could pull back a little bit more from where we're seeing it right now. But the VIX is holding right around that level of 30, looking to see it take off, or once it breaks out above that level of 30, that would be the time you jump into a leverage ETF on the VIX.
Real quick question says, any suggestions on China stocks? Yes, short them. Okay, keep going.
Or just stay away from them.
Yep, okay.
If you short them, that means you're involved with them and you may get in trouble.
Oh, okay.
Or they just take their stock off the exchange. Why is it not working?
There you go.
There we go. Oh.
I'm not touching nothing.
IIPR. So you have this nice channel, but this support floor down here has been holding. I can't read that because it's all red, but 8806, I believe.
Yep.
So you have this really strong support floor. What you'd be looking for an entry, breaking above that 98 even level, looking for a breakout through resistance. If you're wanting to be a little bit more cautious with it, you could wait for the breakout above here. But, with the RT continuing to rise as price has been moving sideways, that shows you some bullish divergence, suggesting that more upside potential outweighs downside risk at this stage. But also if we put on MACD, there we go. Zooming out to a 6-month basis, you can see over the last 6 months, IIPR has been steadily moving lower. DPO and the MACD have been steadily rising, creating a really good looking setup for a bullish divergence. So I know it's not really the play that we typically cover here, hasn't really been performing that well, but I like the trade setup. I need to see confirmation of that divergence actually taking place, so that way we can jump on board and make some money with that trade. Next one, Credit Suisse. Credit Suisse just keeps going down. So if you're going to be trading it, puts are definitely going to be the best way to go, because if you try to trade, or if you try to short the $4 stock, most likely you're going to have a hard time borrowing those shares from your broker. DRN. We're at a new low as of today over the last 6 months. But looking at it here, MACD has hit a higher low. So setting us up for a bullish divergence. And also, like we were talking about, when you look at DRV, it definitely looks a little overextended. So for the short term, while it corrects or has a pullback to give a new entry, we could take advantage of this to make some money in that that brief period of the correction there. And last but not least, GME. So at GameStop, we have this support or this trend here. I have to go all the way back here to get it. But we have some consolidation where we're having lower highs, but also higher lows at the same time. After this pullback, you're seeing this consolidation. You're seeing a wicked wedge. Usually this is an early reversal sign, but once again, to take advantage of it, you have to wait for it to break out of that that consolidation there before jumping on board. But I like the setup. I like the consolidation. Just need to, I wanted to bring it early so that way anybody who's been following it, if you're looking to add more, you can find it, and so you can time it a little bit better for your entry. That's going to be it for mine.
Leave
Glenn?
that one up. Because the story that I sent to you was about GME. Move your mouse. There we go. Was about GME. 4 reasons why I agree with this story. I don't like it anymore. And I'll tell you why. And I know why you like it. But number 1, the shorts aren't interested anymore. Number 2, interest rates will continue to rise. Number 3, GameStop's future still looking murky. Even with the whole NFT and the digital downloads. And the last thing, number 4, was the video game industry is still weak right now. I want you to read the story. This came from NASDAQ. It wasn't from, any wild, wacky guy. I just got to the point where I got super concerned with this stock. I've made a couple of dollars trading it. I've lost a lot of money trading it. I think it's gone beyond the whole meme thing. I do like the story that they're trying to pivot. But if you look over the last year, that's the stock. It's a tough stock. It's a tough. I mean, and again, that's just my 2 cents. I know we've had a lot of conversations about it. It's run and fallen hard. It's run and fallen hard and now consolidating. This is just a tough stock, man. I understand everything behind it, but I'm not sure that it's enough to really push this stock. That's my 2 cents. And I'll leave it just like, I'll leave it just like that. But again, I know that we've had a lot of conversations about it. And I just, and because of you, I've tried to, to try to make some money on it. It just hasn't been a good thing. And maybe it is a longer term play. I ain't got the patience for it. Maybe that's what it is. That's all I'm telling about that. That's all. Nothing more, nothing less.
Options, my friend. Options.
I got you. All right. Let's go look at my picks from last week. I think I was probably bullish, bearish, bullish. The only thing I was bearish on was probably Twitter. I was bullish. There was news that came out on XRO. There's my lithium play. There's my uranium play. There's my oil play. Let's go see what they did last week. Let's quick test them. 7.37%. And the Contras were the ones that made the most money. But yeah, there's uranium down, there's lithium down, there's oil down. I was already bearish on Twitter, and I was bullish on XROF. So it does look like the commodity plays were under some selling pressure for the week, but it was the Contras that made up for it. SOX up 46%, HIBs up. And I actually am trading the both of those in my real world portfolio as well. All right, let's go look at my new picks for this week. And the cool thing about this was I used the top VST stocks in the software. All right, and with that, Cheniere. I did a video on Cheniere this week. Hopefully you took a look at it. If you haven't, please go back and look at it. Denbury, there's SOX I still think that the contras, just like Patrick, still have some downside. I'm still bullish on the DRV. That's the opposite of the DRN. And
Overall, I'm still bullish on DRV, but I think we're setting up for a slight pullback here over the next few days on DRV before we see it make its next leg higher.
And I think that DRN might be a good play. All right, let's go take a look at the graphs of these real quick. Let's do this real quick. Look at intraday. Look at Cheniere. Again, I did a video on it talking about why I liked it. If you hadn't taken a look at the video, please do so. I'm going to put these on a 3-month graph. Take off Patrick's layout, which I think is a beautiful layout, Patrick. It's a great layout.
Well, thank you, Glenn.
Shut up. All right. So let's go put these on my swing trade. 20-day exponential moving average, and I also want earnings per share. LNG, bottom left, top right, taking off like it's still like an airplane. I'd like to see it take up that level of resistance. How do you back test on VectorVest? Ravi, give our product support a call. All right, I like the bounce off support. I like it's above the 20-day exponential moving average. I'd like to see it take out that level of the 3-month high. Earnings per share looks beautiful. Bottom left, top right, another petroleum. Above the 20-day, good volume. Watch earnings pulling back a little bit, but higher than it was 3 months ago. A little bit, I can't call that a shooting star. There's a lot of selling pressure, follow through, no follow through today, but a bigger wick on the top of this bar shows me some selling pressure, but clearly above the 20-day exponential moving average. SOX hitting a new 3-month high today. On the volume, a little bit of a U-shape here where it fell when the market was doing good. Now the market's doing poopy. That's a technical term. Gap down, faded the gap. Gap down, faded the gap as it went back above the 20-day, hitting a new 3-month high, broke through a level of resistance of 70.50 2 days ago and hasn't looked back. As a matter of fact, is creating new levels of resistance. Now, CCRN, business staffing, love the earnings per share, a little bit more of consolidation. Currently broke above a level. Actually, it wasn't a level of resistance until back here. It broke through, came down, tested it, held. That level of support held at 30.49, coming back up. Let's see if it can take out the 3-month high, but I do like the earnings per share. Again, DRV, I'm bullish on that. And you know something? This could come right back to Patrick's story that it could be setting up as a good time to buy DRN short term. But even with that, look at the last pullback it had for 3 days and look at that. And DRN probably went up. But even on the pullback, if it stays above this 20 days, exponential moving average, I'm with Patrick. I do like DRV longer term. And if you can hold it through here, as long as it doesn't break through the 20-day, you're probably going to be good. All right. And the next stop, FANG stocks, looking at the tech stocks. A little bit of a pullback today, but even with that pullback hitting a new 3-month high, broke through a level of resistance of 66.59 a couple of days ago. I could see it come back and testing that as a level of support, especially being above the 20-day exponential moving average as volume is rising. So there's a lot of conviction behind this move, even though it's got a down day. Look at this, 1, 2, 3, 4, 5 days of rising volume above that value of 20-day exponential moving average. I'm feeling that, you know, it feels good. Yeah, it feels good. All right, that's enough singing. That was a little bit of Tony. And I think that's all we got for today. Big thing, Joey, put us on our ending screen. The big thing, Joey, put us on our ending screen. Wow, you really fell asleep with your eyes open. Holy smokes, I didn't know you could do that. Anyway, big news today. Patrick is kicking off the 2nd annual Trading for Charity. I'm hoping that you guys help us out with that. Patrick's put a lot of work behind it. I think it's going to be a good thing. FANG D is the FANG stock.
Finished talking about it.
Yeah, it's the FANG stocks, but it's the bearish side of it. It's a great way to play all the major tech stocks to the downside by just buying that long. Anything, I'm going to end it off today. I'm going to shut us down today, but anything else you want to talk about before we leave?
Make sure they smash that like button on their way out.
We got 53 likes. How does that happen? you know me, I'd like to try to have 100 likes. Let's see. Let's see if we can get, especially if it was worth it for you to be here. We talked about a lot of good things here today, so hopefully that may. Oh man, what are you doing? I'm hearing it in my ears. Stop doing that. It is on because it's got a pair. Sigh. All right, Joey is doing Joey things while I'm trying to do VectorVest things. All right, so with that, we're gonna go, folks. Thank you for being here. Support. I hate you, Joey. Thank you for being here to support afternoon market action. And Patrick, as always, I love the input that we both put in together. Whether we agree or don't agree, I think that's what makes this unique and it makes it genuine. So, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Still praying for all the people in Florida. Bom dia, salam, shalom, namaste, yasu. Till next time, folks. See ya. You just funny as you sit there and go, are we done yet? Are we done? Who got who? Oh, gosh. Oh, is that what it was? Because I'm hearing in my ear, I'm hearing, it's like, what is that? And I'm looking at you. I get it because I can't hear it. Well, you know, so we can put them both on, and that way you can have one, and so you can hear what it's saying. Oh my God. That was funny. He said, oh, my mic is still.